Hello? Hi, it's me, CryptoClick. Yeah, I notice you're trading on crypto exchanges, but without any benefits at all? That's madness. You know, I've been made an affiliate partner with pretty much every exchange out there, so if you want to get some benefits, you might as well set up exchanges with the links that I've got in the video description or in my Telegram and Discord. You can get welcome bonuses for signing up, or even better, up to 20% off all your trading fees for life. Yeah, I know, what a treat. So next time you fancy setting up an exchange, use some of the links that I've got in my video description, because otherwise you're mugging yourself off. Anyway, enjoy the rest of the video.
Hello everybody, welcome back. Let's have a look at Bitcoin. We're going to also think about traditional markets, because this pullback that we're seeing at the moment is being emphasised by what took place in traditional markets yesterday, but I wouldn't be too concerned about that. The everything bounce that I was talking about, 5-6 weeks ago now, or probably longer, but we bought this dip here, or should I say this absolute bottom on traditional markets. This is just the Nasdaq, 14% from the bottom to the top, and stocks within that doing pretty well. Bitcoin, I said at the time, is going to move through association with traditional markets. The everything bounce should filter through to crypto, and obviously it has done. It's been a pretty awesome 6 weeks of trading. And also the commodities, like oil for instance, we spotted the top on that. So this is all stuff that we were talking about on the channel 5 or 6 weeks ago as the everything bounce. The oil now down 21%, as everybody else was calling for. $200 a barrel. Oh, it's going to go to bleh. Well, what we're seeing now is as if you can put yourself in the shoes of traditional markets, right? So they've started to see this maybe a little bit after me. You know, I was definitely there, telling everybody about it, but after me came traditional markets, major players, you know, the hedge funds or whatever, and they started to trade these equities as well. You could see that reflected in commodities sell-offs, bond sell-offs as well, and the Dixie sort of like fluctuating and coming down a little bit. So what we're seeing here is a bit of a sell-off on Friday. I was saying this on the live stream last night as it was happening. I was saying this pullback now on traditional markets is happening most likely because there's been a good couple of weeks, or even just a single good week. You know, in the grand picture of a giant pullback, really, bear market, whatever you want to call it, this has been a good week. So let's take profits on a Friday. Let's go and enjoy the weekend. That's generally what I like to do anyway, probably in a very different way to people on Wall Street, I have to say. You know, a spot of brunch, a trip to the park, that's all I do. But yeah, I mean, that's basically what was going on yesterday, and it was it was permeating the crypto market. Now, obviously, traditional markets aren't open over the weekend, and crypto seems to be continuing with its pullback. And actually, if you look at the chart itself, these are the targets that we had set for ourselves on that pullback anyway, which was a golden cross has taken place. We were looking for a retest of that golden cross. This is something we talk about all the time on the channel. You get a golden cross, it's not a signal, it's a sign of building strength and momentum, but in order for it to be treated and confirmed as a genuine uptrend, we almost always come down to retest it. I don't know what statistically it is, but obviously I've been trading for years to see it all the time. I just generally come to expect it. A golden cross is a good sign of strength and possible continuation of a trend, but a retest of that is required. I wouldn't really want to take it seriously until it gets retested. So as we can see at the moment, it's just been retested on this 4-hourly candle, so that's great. That's what we want to see. And even if we do break down from here, there is some decent supports below us. So this is just a 4-hourly, but you can see if we move it to a daily, that horizontal line of support there represents the channel that we're in, this sideways boring range that we're in for what was basically a month, basically. So we had the breakout of that, and now we might be coming down to retest that. That's also supported by the 21 exponential moving average as well, which is effectively, you know, in crypto terms, like the halfway point. You know, are you above the 21 or are you below the 21? Because if you're above it, it's like a Bollinger Band. I would say that if you're above it, you're more likely to remain above it, and if you come down to retest it, it's often a good opportunity to try and buy that dip, because you're most likely to bounce from there than break down ever so slightly. I think statistically for a Bollinger Band strategy, is like 65% more likely to remain in the upper half or the lower half, depending on which way you're in. So the odds aren't enormous, but they're definitely in your favor. And again, that is supported also by that's what was resistance, which we were looking to see as support. So there's a lot of retesting going on here for this current move up. And look, we need traditional markets, I'm afraid, to open because we want to see if the continuation of its own trend on the Nasdaq and Dow Jones Industrial Average and S&P 500, if all of those can still continue with their uptrends, then yeah, crypto's most likely going to remain in business. And all those upside targets that we've been referring to, which are all major areas of support, resistance, starting with obviously breaking through this 23,400. It's your 50 exponential moving average. We've been stuck below there for the most part of this week. Yeah, this is on the Tuesday. This is why we were getting out of things as well. There's a number of reasons why we felt we were reasonably toppy for most of the trades that we had executed, the week before, leading over that week. It's been a good week just for trading alts, but dominance is low, which makes altcoins, riskier, definitely riskier. You can see the emphasis here on the pullbacks here. So for the most part, Bitcoin is pulling back, but when we're looking at even sats, some sats are getting drained. These are just a few of the things I'm tracking myself for personal trades, but for the most part, alts are going to get beaten up more than Bitcoin because the dominance chart is so low, and that's just the nature of it. The closer you get down to that historical 40% dominance, the more trouble you're going to get in if you keep buying into altcoins. Bitcoin is the main thing, and that wouldn't surprise me at all if Bitcoin is the main mover when we get this bounce. Bitcoin outperforms most altcoins, which I know sounds crazy, but it's true, and it does happen, and this is an ideal scenario for that to happen. So Bitcoin is the main thing to focus on. So what we'll be looking for really, whether it happens today or through the weekend or even just hangs around sideways until next week, is to remain above 21,600. That is the line in the sand for me. There is a small little area where we could entertain, but it's ever so slightly less. 21,375. That's your daily Bollinger Band center, so your 20 simple moving average on the daily chart. So look, at the end of the day, this is potentially a trend continuing to the up. But before we do that, we're retesting supports to see if they're actually valid. Is this a trend, or has this just been a move to the up? Or can we look at this more seriously and go, all right, okay, so we've come down for a healthy retest of X, Y, and Z area. That's fine. Buy those dips. Let's move forward. So yeah, I'll leave it with you there. There's not a great deal more to say. Weekends are not really a tradable time for me. Not really. Too busy for the most part to do any trading. But also, as we all know, traditional markets are playing such a big role at the moment that we can't really trade without them. We can't really trade without. Such a pain in the ass, isn't it, really? But it's true. We need traditional markets to be open to help us gather the information that we need to apply over to the crypto chart. It never used to be like this, by the way. It was way more decoupled. It was barely coupled at all. Crypto was. It was a dream to trade. Not so much anymore, but I'm sure it will be again. And like I say, it's been definitely a really good 6 weeks worth of trading. So let's just see if we can get those bullish retests of these lower zones. But if we start to close below 21,600, start to get a little bit worried and concerned. But never mind, like I say, we've got money on the sidelines. We got rid of our alts. We're looking to pile in when the time is right, and we'll see if we can buy this dip. But if we can't, it's no big deal. It's no big deal at all. We'll just have to wait for another range to be established. Like I say, I closed all my bots looking for a deeper retest for KCS. I'll be buying all that back, trying to maintain that that $2,000 that I've made. So I know it's not much money, but I'm just trying to show people how you can use bots. I started with 1,000. I've managed to double it over 5 weeks, so that's fine. I want to try and maintain that balance of 2,000 as best as possible. So I took chips off the table on Tuesday because I knew there was going to be a dip coming. It was pretty obvious what was going to happen, and obviously we're seeing it happening now. And I'll be buying that KCS back later and starting some bots up when we establish another range. So hopefully what's going to happen is that bouncy around here and then move up to these zones, which is what I think this is most likely going to happen, but we'll have to wait and see how we enter next week with traditional markets. So 26,700 give or take is probably the next major area, and then this area could end up being the range. Maybe little moves up to the top here, 28,000 maybe, but this is probably going to be the next range, I would say, and that's good. Bitcoin, as far as a cycle is concerned, isn't ready. It's not ready. It's not, as far as time is concerned, it's not ready to actually start moving up out of this bear market yet. This just wouldn't make sense. September would be the earliest. Most likely late November into December, to be honest, would be the most likely time we will start to see a real change of behavior and momentum to the up. But it doesn't make this whole situation a non-tradable environment. It's certainly, and we've proved it on the channel, obviously, that you can make a lot of money during this period just from spot trading and bot trading and all that lot. But if we're looking for, you know, one of those moments where you buy and then just, you know, just carry on with the rest of your life, every other day you're looking at your portfolio and you're up again, oh, you're up again, I'm up again, oh, not really that kind of environment, but I'm sure that that will come again, and it's most likely going to be into next year. But as far as right now is concerned, no, it's a trader's environment, and we can trade it, and we've proven that we can trade it. You can see that it is a tradable environment. But right now, allow for the dip to take place, allow for these areas to be retested, and if they hold, brilliant, buy the dip. If it doesn't hold, no big deal, no big deal. We can still just wait and see where it goes after then, and this would be a failed breakout. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.